Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey. This is the show where I get you the hottest companies. And right now, the earnings season is there and I've got you a very interesting company. But before that, try to guess which company I'm talking about. First hint I would like to give you, it's a Chennai-based tech solutions provider. Hardly two players are there in this industry. It will get very easy to guess by now. Second hint is it's an authorized reseller of Apple. Whenever Apple related news flow comes, there is a reaction in this stock. I'm sure you must be getting the name by now. I'll give you one more hint. Of course, recently the company came out with its strongest Q1 numbers. The benefits is because of the memory shortage and the price realizations happening. So this is the trend which we have picked up already in NDTV Profit, and now it's coming out to play as well. It's backed by Fidelity Group and there is no promoter. Interesting, right? The company in focus, of course, the shares have been in green, but the name is Redington. This is the company I'm talking about, and of course, the logo is also green. So there is a contrast, but not for the investor returns. But why are we calling this company? First and foremost, it is the Q1 earnings season. The highest, you could say, PAT and revenue has been recorded. So we'll try to understand, is this one-off or a structural play for second or third quarter as well? And remember, there is a festive season angle also. Let's talk about the second key reason is how is the company evolving, especially, from the current levels to the future. Is there a change in the business model? Third question would be the guidance for the second quarter. This momentum, does this continue going ahead? There's a lot of trends being played out and all of them are positive for the company. The higher memory prices, is there any price hike we can expect, especially from Apple? Because the buzz in the street is there might be Apple 17's price hike coming in. The demand trend, so the large enterprise clients, because this quarter they did win important enterprise deals, and also the Apple iPhone 17. That will benefit the company as well. Maybe a short-term trigger, but remember the stock has run up a lot. The growth outlook for the international business, because that has also done well, not as high as the India business, but nevertheless there is a positive momentum. Then we'll try to understand this. And of course, the premiumization trend, things are getting expensive, but so is our research on the AI data and as well as your overall setups in the IT space. But let's talk about the company itself. What does this company do? I'm sure a lot of you know about this company, but it's a revision for the people who know, and it's for the new folks. I'm going to explain it down as simple as possible. Chennai-based technology solutions provider, largely whatever you could say the communication devices or the digital devices are there, that's what the company sells. This is the presence which is there, and it's not only in India, pan-India player, but also they are having exposure in South Asia and rest of the world. This is the large network you can see because their business model is such. It's a very important cog in the wheel, 168 warehouses and 71 sales offices. So this is a very simple business model. They have different products, IT, telecom, lifestyle, solar, cloud, enterprise, and the future, the way we are looking forward, we are going to need all of them which they sell. They're the largest authorized reseller for Apple as well. I'm sure a lot of fans of Apple are there, but right now you must be a little bit angry because the price hikes are coming across, and Apple recently raised these prices between 14 to 70%. Mac and iPad, it has already happened. So the company does benefit. To put it in simple perspective, it's just like a toll booth. Apple, 31% of the total revenue comes from this segment. Of course, the other segments are also there. We have a HP, a Dell as well, and most of them are hiking their prices because of memory shortage. This trend is likely to continue going ahead. So keep an eye on the stock. The revenue breakup, they call it CISA. CISA is very simple. It is Singapore, India, and South Asia. That is where 60% of revenue comes. And if you look at the rest of the world, it's around 40%. So it's evenly balanced, if you analyze that. But moving on, after this revenue breakup, the Q1 numbers, just do that revision because everybody's talking about it. The India business, 63% growth coming in. Also, the second important point while tracking the numbers is the higher personal computer, the PC as you call it. Those realizations have went up and even their margins have gone up. It's generally a very low margin business, high volume, but story is different now. Pricing growth is much there than the volume growth, and that's why they are benefiting it from it. Large enterprise deals were also won in this quarter, so that also aided the numbers. So 3-4 positive factors actually helped the company come with very solid numbers. The revenue growth, look at that. The global segment is 34%. The technology segment is 50%. This, of course, is the premiumization trends playing out. We have software, endpoint solutions, and mobility. All sectors hitting the out of the park. And that is where a lot of bullishness comes in the counter. But what may work for Redington? These are the 5 important points. If you can write down, scare a screenshot with your friend, but this is the most important thing. Confidence in the large enterprise deals. That's where the management commentary is coming. The second one is the decent working capital management. In a business like that, inventory management and working capital management is very much important, and they have done well in this. Also, the margins and the realizations, they are likely to go up. For a business model like this, it's technically very low margin business, but from 1.5% to 2% is a very significant jump. Beneficiary of rising memory prices, that's the indirect story which I told you about. And also the FIs are slowly increasing their position. Remember, there is no promoter and FI heavy holding companies. They are almost 60 to 61% stake. But what may not work for Redington, the valuations are not at all attractive for a company like this. Its stock has run up, touching its all-time high levels. The demand determinant, of course, India is a price conscious market also, and because of the pricing going up, there might be a little bit of impact on the demand. Supply chain issue risk, of course, if there is a shortage of memory, there might be a shortage of products to sell. Also, the margins might not sustain, and there might be bargaining power of the overall of their wholesalers. They might ask them to reduce those margins. Large deals might be lumpy in nature because large deals don't happen all quarter. There are seasonality element to it. So that is why I'm giving you the second side of the coin for Redington as well. So we analyzed the entire picture for Redington and also what can work, what may not work. But what definitely works is the KYC ratings. This is one of the most important things in our show. When we get you the core numbers, we get you the return ratios, how the business model looks like. And over a period of time, we share with you the shareholding pattern as well as the street cred of how things move out over a time period. Interestingly, I have also taken the valuations. If you could show the rating parameters, the second plate, and then we will show you that the valuations is important. And there's just one company, I'll tell you the name, I'm not going to say it right now, where we are going to do a peer analysis. And lastly, the outlook, what lies ahead, and is there an Apple iPhone activity in the offing? That's what we'll try to understand. But let's talk about the income statement, how things have panned out. Largely, these numbers, when you look at it, 2.22%, this is the exact business model. So do not get, a bit fair that why this margin is so less, because this is the business model. You need to understand that top line growth has been decent, 15%. But to give a little bit of benefit of doubt, the numbers in Q1 have been rock solid. So let's just have a look at the Q1 numbers to show you how important this is. A good jump coming back into that 2%. That's a very important jump. Top line going up almost 35%. So yes, we can see a very strong numbers. And because of that, I'm going to give this entire setup, which we have given, largely a strong thumbs up for income statement. Of course, the Q1 numbers is important for that. Let's talk about balance sheet. And remember, a company like this will have high working capital. So you do not get surprised when you see the borrowings, which is around 2,600 crore. A lot of them are on the working capital aspect. The cash levels are also decent. But there's nothing much to actually track for a business model like this for this company. They have some really good vendors, so the payment cycles are sorted. So I'm going to give this a neutral rating and move ahead. So we spoke about income statement, we spoke about balance sheet, and I mentioned you earlier that the working capital ratios have improved, and of course the inventory days, or you could say the other important characters which we check, that has done well. Largely, you see the numbers, the operational cash flow numbers, that conversion is pretty decent. There will be lumpiness in it. So to be honest, more than tracking the cash flows, you should be tracking overall the working capital ratios, and largely they have done well, but I'm going to give this a neutral rating. Let's move on from this and let's talk about the return ratios. And this is where my strength or in my thesis comes in for this counter. From FY24, it was 19%, but a very decent, a very low margin business, but stable. But look at that, the ROE ratios are maintained, and the story is the same when it comes to the ROC, the return on capital employed. And there's a good bump up in Q1 from the averages for both of these ratios. And if this continues because of the memory shortage, likely the ROC can hit the 20% mark. So as of now, it's a strong thumbs up when it comes to the return ratios. So shareholding, let's have a look what's happening here. And you must be surprised, Sharad, where is the promoters? So there isn't any promoter definition here. Largely FIs, VCs, Ps own the company, but in the definition of FI, DI publics, the stake hasn't changed. And one good reason is there's some really good backers. You know, they have Fidelity Group, which have a lot of stake in this company, and they have actually increased. A minor buying started already, and this is what I liked, an institutional support coming in. So it's a strong thumbs up when it comes to the shareholding. But the stock has hit its all-time high levels. But the question is, for the long-term investor, has the stock made any money or not? And the query is here. Last 5 years, only 90%. The stock has not even doubled. But congratulations to you if you are a medium-term investor or even a trader. You have made good money. From March lows, the stock is up 56%, and also from July lows, it's up 20%. So a good bet in the short term and medium term, but in the long term, it definitely has undertaken a very big chunk of the patience of the investors. So I'm going to keep this neutral in my rating. At times, you have to be a little bit strict on your analysis, but this is the story. Let's talk about valuations, and valuations is a little bit of concern for me. This is the 12-month trailing P ratio I've taken, and you must be wondering which other companies there. Largely, we don't talk about it. Company does the same work as Redington, plus minus here there on the product portfolio is Rashi Peripherals, but the valuations is high. For a business model like this is definitely high. It should be a single-digit P valuation, but look at that, it's up 20 times, and after the recent run-up, even Redington is trading at 15 times the 12-month trailing P. So as of now, valuations are not at all attractive for the entire sector. I would say you to avoid it, and it's a thumbs down when it comes to our analysis on this. Apart from this outlook, this is very strong. Memory prices are expected to rise more, and then a second order benefit comes to the company. Second important reason is the Apple's iPhone 17. That's where a price hike likely is there, and Apple iPhone 18 is going to be released in September. So definitely the company is in a good spot. The tech adoption that's accelerating across cloud, AI enabled infrastructure. Just think about it. Your data prices have gone up. You are adding more equipment to your home office or all these segments, and look at that, and this has become a very important part of our expenses. Premiumization, in that also trends are playing out, and when there is a premiumization trend, remember the margin is something which the company gets on the higher side. So its outlook is also pretty strong. So let's give you the entire picture of the KYC ratings for Redington. Where does the thing stand? Income statement has been really wonderful, but take things with a pinch of salt for a business model like this when it comes to balance sheet and cash flow. Return ratios nicely maintained. Of course, Q1 numbers aiding the sentiment and also some of the numbers, but the stock that has run up, and largely for the traders and mid-term investors, it's a great news, but long-term investors, they need some time as well. Valuations not attractive. The stock has hit its lifetime high levels, so take things with a pinch of salt. Shareholding, interestingly, FIs have been increasing a bit of stake, and outlook, of course, remains very strong. So net, the company gets 5.5 out of 8. It's largely in line to positive from the average numbers we generally give out to a company in our KYC show. So this is the entire picture for the company. The analysis is done. We know about the company, but we need to know more, but from the management. So we'll be joined in by the Managing Director and Group CEO of the company, S Hariharan, and he has donned a lot of hats. 3 decades of industry experience, but not only that, he was an entrepreneur himself, and a very interesting company. It was called Third Wave Power. So he has actually entrepreneurship experience and leadership experience in HP, Wipro, Infotech, Sun. So that's how you can imagine how good he is in supply chain and sales, and of course education from IIM Bangalore and IIT Madras as well. So joining us, we'll have S Hariharan with us. Good afternoon, sir. It's always a pleasure to have you, and a very stable business model, a very stable company, but this time it was very different. The Q1 numbers, what led to this growth, and how do you see it panning out?
Thanks so much for having me at the show. I loved your analysis, but I hope it is getting better than 5.5 next time. Anyway, let's talk about this quarter. I think we had a fantastic quarter, the best revenues and profits ever, almost 35,000 crores revenue, 35% growth, and 77% plus growth on profits. There are several factors that led to this growth, and it's not just the memory prices. So we are divided into four business units. So Software Solutions Group saw a growth of nearly 60%. And that consists of cloud security software, nothing to do with memory prices. That continues to grow because a lot of people are migrating to the cloud and software business, and AI is enabling growth there. The second part of the business, which had strong growth, is technology solutions. There is an element there on the server storage networking that got a bump up because of price rise, but the data center piece, we are beginning to win a lot of data center deals. This quarter is about 1,000 crore, but we have a backlog of many times that on data center. The movement to data centers in India because of the announcement made by the government on tax holiday and the a lot of Europe and Middle East corporate customers moving into India is driving the data center growth. And we are getting a good chunk of that. So that's another big driver growth now and into the future. On the PC business, the endpoint solutions, clearly the prices due to the shortage of supply and the price rise played a role, clearly, where the unit demand is flattish, but the revenue demand has been strong. And on the mobility, as you rightly pointed out, the premiumization, if you look at what's happened last year, the smartphone in India grew units 1%, but it grew from a value perspective 8%, driven by premiumization, and we are playing into brands that are largely in the premium category. So all four played a huge role in our growth. And of course, between geographies, India had a stupendous growth, 60 plus percent. Middle East Africa, despite the West Asia crisis, had a 15% growth.
Well, very nicely put, and of course, more reasons for the growth, and that's what the point was in our analysis, that everything is hitting at the right time. But because of that, just wanted to understand how Redington was as a business model, 2 years ago, and right now for the future, how it's poised. There must be a difference, and what has happened in the last 2 to 3 years. What was that model earlier, and how things have changed now?
Okay, so very good question. So two changes we made, and one is we have intensified our focus on software solutions. And the non-physical piece of the business used to be about 10-12% of our business. Now it is 17%, growing very fast. This consists of cloud security software. People migrate to the cloud. The AI piece comes very handy there as well. On the technology solutions, our focus was a lot of inside the office, we call it on-prem server storage networking, but we're beginning to play in the non-hyperscaler data center driven by neo cloud operators. Those two are driving our growth tremendously. And on some of our core business like mobility and PCs, we have created some go-to-market models, like we famously call our D2R, direct to retail model for some of the premium brands. We built that model specifically for some brands, and that has really helped us. So those are two, three big changes we made. We've also got a geography cluster model. So we've got 8 clusters. We have an India cluster, UAE cluster, Saudi cluster, a GCCL cluster, an Africa cluster. So there's intense focus on countries, intense focus on non-physical business, intense focus on data center. All these are actually generating growth as well as better margins in some of these pockets.
Exactly, and of course, a lot of funds and large investors, retail investors, all are watching our show, and they have understood that why there is a change of strategy. And when there is a change of strategy, it's not a one-off in a quarter. That means it's a structural change. So I just wanted to understand this momentum which we have in the first quarter. Will it go through in the second quarter, third quarter as well, or is there any lumpiness in your business model as such?
No, we definitely parts of it, we see the momentum continuing. Software Solutions Group, we definitely see the momentum continuing. Mobility and PCs, we have some of the momentum because of premiumization, etc. But some part of it is memory prices related. And at some point, we would see the demand, actual end user demand slackening because prices have gotten to a point where people saying, hey, it's too expensive for me in the consumer side. But commercial side, we still continue to see the demand there. And I think some of the corporate customers will move from buying the laptop outright to leasing models, financing models, etc., so that they can get the higher price model because they need to go through the refresh cycle. And on the technology solutions side, the data center will continue for the next 4, 5, 6 quarters as India goes from a 2 gigawatt to a 10, 12 gigawatt install base. So I would say 80-20, but 80% of the business we see momentum continuing for the next 4, 5, 6, 7, 8 quarters. There may be a little bit of lumpiness, especially on consumer demand as prices start slackening or softening a little bit of demand on the phone and the PC side. But we don't know, we don't think that will happen this coming quarter yet, but maybe somewhere it will play out in the next 2, 3, 4 quarters.
Exactly. There was price hikes in a lot of sectors. And Hariharan sir, do you think these price hikes are likely to come in the short term because the festival season is about to start and there's a lot of pre-buying which happens? So just wanted to understand the industry perspective.
I would think that the smartphone prices now, Android had raised prices, now Apple is raising prices. So maybe it has peaked out a little bit before the festival season, but I don't know whether it is completely stopped. Clearly on PCs, there's going to be more increase in prices in the coming quarter as I see it. But again, at some point, this will stabilize. So you will see some more short-term increase in prices is how we feel it. The brands control the price changes. We don't. But based on everything we see, that's what we see. But in the maybe the next couple of quarters, this might stabilize. But it's not going to go down. We don't see for 4 to 6 quarters pricing really going down. But is there some more price increases in the horizon? We do see definitely in the PC side some more price increases.
Right, and this quarter also the PC realizations were on the higher side, and the
Yeah.
spending which is there, be it a retail or corporate, that has changed. 2, 3 years ago it was different, and now it is a part of our everyday life and what are the product cycles are, and maybe that's why the perception might change for your industry. But I want to understand the large enterprise clients deals. They at times they are lumpy, at times they come in the first half, or you could say the first quarter it gets spilled into. How are those trends looking like? And you mentioned the data center angle as well. So I wanted to understand about the large enterprise clients. How's the guidance?
Yeah, so definitely the demand is not necessarily slackening, but they don't have infinite budgets to increase. So I see two, three, four things happening on the enterprise side. One, clearly the price increases on laptops and servers. People are starting to look at leasing models and financing models. Can that enable me to do things? There's also device as a service model, and that's going to evolve rapidly. And people might go into more financing leasing models to really put up in the next 1 to 2 years in terms of the price increases. That's one trend we can see. A second thing is cloud versus non-cloud. So there may be more people who might migrate to cloud, but cloud necessarily, when you get to cloud, you need to optimize your pricing, your spend on the cloud. Then there is the AI factor as well, because people are beginning to start spending on AI, both in terms of buying commoditized AI, whether it is a chat GPT, Copilot, etc. There is a tokenization cost when it comes to AI. And so you have to really now put forward your hardware. What's your budget? What's your budget with cloud? How do I optimize that? What do I do with AI and how much spend do I have? Tokenization costs and security. How much do I keep in house? How much do I do? So all these are creating many different decision points and managing many trade-offs. We will see new forms and new alternatives emerging in terms of how people are looking at all these things.
Sir, that's a very important trend you have actually pointed out, and it's not just asset heavy model now. It is shifting to asset light model. There is leasing, financing, and also refurbishing, and these are the companies which are hardly discussed in the Indian stock market, and hopefully the street gives a proper re-rating to them. But I want to understand the international business also, how that is panning out. This time the numbers were stable. I wouldn't say as good as Indians, but how are those looking like? And there's, of course, the channel expansion also. If you could just share some numbers or any guidance on that.
Excellent point. So, like I said in the beginning, Middle East Africa region grew 15% this quarter, year on year. And we were a little surprised how strong it came despite the West Asia crisis and the supply chain challenges we've been through. So I will break that up into a few parts. We have a cluster called GCCL, The GCC countries and the Levant countries, which consists of Qatar and Kuwait and there is Iraq and Jordan and all of that. So that part of the geography actually grew 90+% despite the crisis. Africa grew nearly 40%. So those two are actually growth engines despite the crisis. UAE and Saudi were a little bit more sober. They're small declines, -3% and -10% declines. But we do expect, as the West Asia crisis stabilizes and becomes more of a noise level, the growth there will come back, because UAE for us was growing at 20% the last couple of years. There's a lot of spend on data center, AI, cloud in UAE, and so is Saudi. So both these markets, we do expect, once the West Asia crisis, I don't know when it will be resolved. Hopefully the next 1 to 3 months, and the second half can look good on the growth there, because they have delayed some spending, etc. But it's more flattish to a small decline. My outlook, if the West Asia crisis goes away, is a strong double-digit growth in that region. And then we're just opening the Southeast Asia markets, still a long way away.
Right.
We focus largely on South Asia and just getting into ASEAN just now. And we'll see some growth there over the next 3 years, not the coming year.
Okay, so of course, South Asia is work in progress, but a pent-up demand in GCC might be another growth trigger for your company. But you have given us the entire picture and how things stand, and right now you're in the middle of that, be it AI or data center theme, and apart from that, the memory price shortage as well. Thank you very much, Hariharan sir, for your time, and best of luck for the future of the coming quarters as well. It was a pleasure to talk with you. So
Thank you
that's
so
the
much.
management of Redington, and after a really long time, the company has come out with a very strong set of numbers, but it's a play on AI, it's a play on data, as well as on a memory shortage, and everything is happening in the same quarter itself. Interesting, right? So for these interesting stories, stay tuned to NDTV Profit and keep watching KYC.